Welcome to the weekly market update. First, I'd like to start the session by giving you some information about me. My name is Ehab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Let's start the session. Here are the events that we will be looking at this week. Tuesday at 9:30 a.m. UK CPI, at 1:30 p.m. US Core CPI, Consumer Price Index from the US. Wednesday at 7 p.m. all London time, US FOMC interest rate. At 9:45 p.m. New Zealand quarterly GDP. Thursday 9:30 a.m. UK retail sales. Friday 18th of December at 1:30 p.m. Canada Core Consumer Price Index. Sell-off in commodity currencies were the main focus last week as WTI crude oil tumbled to settle at 35.6 US dollar a barrel. That represented over minus 10% loss for the week and hitting of a 7-year low. Also, Brent oil actually now trading around 36.8 and it's close to 11 years low. The weakness in oil dragged Canadian dollar down with dollar Canadian dollar surged to close at 1.375 last week. Highest in more than a decade. Australian dollar was briefly boosted by another month of speculator job data, but ended as the second weakest major currency. The weakest was Canadian dollar, second weakest was Australian dollar. Next to the Canadian dollar and followed by the New Zealand dollar. Yen was the strongest one with the help of the risk aversion. Meanwhile, euro and Swiss franc extended post-ECB gains. Sterling and dollar were mixed. In the US, focus will now turn to the highly anticipated FOMC meeting on December 16. Federal is widely expected to finally lift interest rate to 0.5%. Markets are pricing in around 80% chance as of Friday. The first question is whether there would be dissenter in the decision. Secondly, the tone of the statement would set markets or markets' expectation on the pace of tightening in 2016 next year. Overall, it's now all about whether Federal would shape the hike as a hawkish, neutral, or dovish tone. that could trigger larger volatility in the dollar, in particular during this thin holiday trading period of the year. Last week, the unemployment claims jumped to its highest in 3 months, but is unlikely to impact the federal's decision this week, as the indicator remains relatively close to its multi-decade lows. The unemployment claims. It could, however, have a negative impact on the unemployment rate further down the line if this trend continues. And retail sales expanded last week to 0.4%. In Europe, German industrial production expanded at a marginal 0.2%, but much below the 0.8% expected. Syntex investor confidence ticked higher to 15.7 from 15.1 previous, but below 17.2 expected. The actual release was higher to 15.7. In Japan, gross domestic product, the GDP, was upwardly revised, so no longer technically within recession. Core machinery orders accelerated for a second consecutive month by 10.7%, much above minus 1.5% expected. The actual release was 10.7%. Technically, now no recession. In United Kingdom, the official cash rate, votes, and asset purchases all remain fixed. However, Bank of England acknowledged oil could have negative impact on the economy, as analysts are now calling for it to drop below $30. In Australia, business confidence remains elevated, but consumer confidence has diverged, with family finances down from 1 year ago and expectations of the economy from 1 and 5 years ahead also dropping. It was the employment data which stole the show for the week, last week, with the very good jobs print of 71.4 thousand. It was expected at minus 10,000, but the actual release was very high, 71.4 thousand. If this is to be upscaled to US non-farm data, it would be equal to US creating around 900,000 jobs a month. In Canada, Canadian dollar suffered its largest single week decline as oil falls, and the expectation for a further rate cut in Q1 or Q2 next year grow. And all expectations is Canadian dollar will still weak. In New Zealand, RBNZ reduced their cash rate to 2.5%, sending the Kiwi dollar higher. Now, with the events that we should look at this week. First news we will watch is UK CPI that will be released on December 15 at 9:30 a.m. London time. UK CPI, or Consumer Price Index from United Kingdom, should provide plenty of momentum for the sterling, especially considering how Bank of England is trying to keep the market believe that a rate hike is still on the table. It's forecast at 0.1%. It was previously minus 0.1%. How to trade this news? Our trade plan, we are looking for a deviation of 0.3%. The deviation or the deviation number or factor is the gap between expected and the actual release. We'll subtract this from that, and if we get 0.3%, so this will be our deviation number. If the inflation number remained above 0.4%, we will make rise option of the pound. We will expect the pound to rise. If the inflation number or the CPI number decrease to minus 0.2% or less, we will look to make fall option of the pound. We will expect the pound to fall. Even with a slight difference of 0.1%, market usually overreacts, and it's actually a good chance to trade. If our deviation number is hit, there is a strong possibility that the market will move more than 70 pips immediately. We will be looking to trade this release using after news retracement method that we trade most of the news using it. We will wait for the release. We will see the number and then wait for the market spike and then wait for a decent retracement of the market before making our option or our order. So it's forecast at 0.1%, waiting for deviation number of 0.3. So we will expect the pound to rise at 0.4% and to fall at minus 0.2%. We will make our order using after news retracement method. We'll wait for the market spike after we see the number, if it hits our deviation number, and then we will wait for a decent retracement before making our option. But if we don't get the deviation number, I expect, as usual, the market to follow the pre-release market condition and sentiment, and just follow the pre-news trend. We will see the trend of the pound just before the news, and if we don't get our deviation number, the actual release was around the forecasted number, so we'll just follow the pre-news trend. We will see how the market will react, and we will just enter the market after about 5 to 10 up to 15 minutes after the news. US core CPI will be released on December 15, tomorrow at 1:30 p.m. London time. US core CPI is expected to rise to around the 0.2%, and with the federal potentially hiking rates this week, stronger than expected surprise should add to that speculation. It's forecasted at 0.2%, the same as previous release. The plan to trade this news is our minimum tradable deviation for this release is 0.2%. If the release number, the core number, decreases to a minimum 0%, then we will make full option. So we'll make fall options. We'll expect the dollar to fall at 0% or worse. So we'll make fall option of the dollar with other stronger currencies at this moment. If the core release is 0.4%, you will make rise option of the dollar. We are going to focus on the core figure or CPI, expect food and energy, not the headline CPI. They will be actually released at the same time, the core CPI and the headline CPI. We will focus on the core number. We will be trading this release using our after news retracement method. We will expect the dollar to rise, and we should make rise option if we get 0.4 or more, and the full option at 0% or less. And they will trade this news using after news retracement method. But if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, most probably upwards, because the expectations of the interest rate hike. The next news is US FOMC interest rate decision on December 16 at 7 p.m. London time. US FOMC interest rate decision is the main focus of the week, with federals openly talking about rate hike. We will see as to how far Yellen is willing to go with rate tightening. It's forecasted at 0.5%, previously 0.25%. How to trade this news? Considering all of the facts, I expect seeing a rate hike as most analysts expected. Global economic slump has affected federal decision to some extent, but federal is ready to hike the interest rate regardless of what other factors are. The scenarios expected are: if federal go ahead and hike rates even by just 5 basis points, market will push in the direction of the dollar definitely, as this is the first of many in my opinion. We should make full option of the euro dollar or rise option of the dollar yen. You will expect the dollar to get strong with any rate hike, any increase in interest rate, even with by just 5 basis points. I expect the dollar to get strong. And you can see here in the chart the federal fixed interest rate at 0.25 for a decade. If federal maintain the current policy and they kept interest rate at 0.25%, we will see a sharp fall off in the dollar, and the traders will surely take advantage of this surprise and push the dollar much lower. So any increase in interest rate, we will make rise option with the dollar against other currencies, and other scenario, if the federal maintains the currency or the current policy and the interest rate the same, 0.25 or less, we will see a sharp sell-off of the dollar, and we should make full options of the US dollar. New Zealand GDP or gross domestic product quarter release will be released on December 16 at 9:45 p.m. London time. New Zealand GDP quarter release is quarter release and may impact the market and especially push the New Zealand dollar currency to the next level if we get a significant deviation. It's forecasted at 0.6%, previously 0.4%. How to trade this news? The expected number is 0.6% and the deviation is 0.3%. Again, the deviation number is the difference between the actual release and the expected release. In the event, if it hits the deviation number, we should see market move more than 50 pips or more within 1 hour. We will be looking to make rise option of the New Zealand. If the release is at 0.9% or better, we'll make rise option of New Zealand dollar, for example. Or we will make full option of the New Zealand dollar if the release at 0.3% or worse. We will be using our standard after-news retracement trading method. So we will make rise option of the New Zealand at 0.9% and full option at 0.3%. If we don't get the deviation number, I expect the market to follow the pre-release market trend, and we just should have a look at the trend before the news release and follow it about 10 minutes after the news release. UK retail sales will be released on December 17 at 9:30 a.m. London time. UK retail sales is expected to come at 0.6% and we will be looking for a minimum deviation of about 0.5%. I would recommend to trade if the figure were to hit our deviation, or it's probably best just to stay out. It's forecasted at 0.6%. Previous release was minus 0.6%. The monthly retail sales report is a direct measurement of consumer activities at the retail level. A higher release is generally good for the economy and for the currency. A lower release definitely is considered negative for the currency and the economy. Our tradable deviation, or the surprise factor for the UK retail sales, is 1.1% to make rise option and 0.1% to make full option. If our deviation is hit, we can expect the market to move at least 50 pips within the hour. So we will make rise option. We will expect the pound to rise at 1.1 and to fall at 0.1%. Considering that we are expecting 0.6, the forecasted number, I would recommend to make the rise option only if the figure is at least 1.1% or better. We will be looking for an after news retracement trade for this release. And as usual, if we don't get the deviation number, I expect the market to follow the pre-release market trend. Canadian core CPI, the inflation number from Canada, Consumer Price Index, will be released on December 18 at 1:30 p.m. London time. Canada core CPI is likely a high impact release for Canada. It's forecasted at 0.2%. Previous release was 0.3%. How to trade this news? Our deviation for this release based on a historical track record around 0.3%. Therefore, look for tradable figure of minus 0.1% or worse to make full option of the Canadian dollar, or 0.5% or better to make rise option of the Canadian dollar against other weak currencies. So we'll make rise option at 0.5% and full option at minus 0.1%. Keep in mind to look for an after news retracement trade for this release, like most of the news release we trade. We will wait for the release, then the initial market move, the spike, and wait for a decent retracement before buying the option. Remember also, in this news and in all other news that we trade, if we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment. I want to remind you, if you missed a webinar or want to watch it again, you can watch it at binary.com YouTube channel. You can also find instant update of the news at resource page at my website ehabjubail.com. Go to ehabjubail.com and press resource page to find instant updates of the news. So then I'd like to thank you for attending today's webinar. Goodbye and see you next time.